I was literally about to do a whole series on leveraged ETFs because they sound pretty cool, right? Okay, if I don't have the money to trade Tesla, I could trade TSLL. If I don't have the money to trade Broadcom and things like that, I could trade SOXL. If I don't have the money to trade SPY or QQQ, I can get a big boost to my income by trading TQQQ as an example. And once I started to do a little bit more due diligence, oh my gosh, using plain old Google, I definitely didn't like what I saw is like an understatement. I don't even know what to say. I'm speechless. Let me walk through exactly what I was looking at, and then you make your own decision as far as if leveraged ETFs are for you or not. All I know is it makes me feel a little bit like the 2007 subprime crisis and all those junk bonds and junk credit swaps and derivatives that blew up the economy. That's what leveraged ETFs look like. Whoa. Now I'm gonna walk through a couple of them via screen share. So let's just jump right in. Here's the thing, guys. It is so easy to make money in the stock market, and it is harder not to lose it. And literally the only times that I have lost money and actually blown up my accounts is when I used leverage and when I had too much leverage and I thought all was good, and then there was an extended move that couldn't end fast enough. So for me, ethically, I'm never trading a leveraged ETF. Now, I know what some of you guys might be thinking. Hey, I don't have a big account, Michelle. How can I make money? Listen, stick to the vanilla stuff, guys. Find a small dollar ticker that you like, that you believe in. Sell a put way under where it's trading. If you get assigned the shares, buy them, sell a covered call, and have more money on the side to sell another put if it goes down. And don't use margin. If you do that, you will be successful. It's that simple. You know exactly what you own, a quality company. Now, meanwhile, I have a really good friend of mine in New York who's massively invested in YieldMax funds. And they recently announced like a dozen reverse splits across their lineup. That is a red flag if I ever saw one. If you don't know what a reverse split is, it's this. Let's say you have 100 shares, and let's say the stock is trading at $10 per share. When the company does a reverse split, let's say it's a 1-to-10 reverse split. So the total value is the same after the split, but what they're trying to do is attract more people, because when a stock comes way, way down, it loses buyers. People exit, and not a lot of people want to get back in. So they tried to pump it up. It's so bad for a stock. So over the next few days, I'm going to look at YieldMax in particular for this friend of mine. And in the meantime, I started looking into SOXL because I've been getting a lot of comments on SOXL, the semiconductor leveraged ETF. And I'm going to show you in this video a couple of things that I found that might surprise you. All right. Hey guys, let's start off with a popular leveraged ETF that a lot of people talk about on my channel, which is SOXL, SOXL. Now, I also just want to take a look and see what SOXL is. So the easiest way to do that is just to click up SOXL ETF in Google. It tells us the top holdings are this, right? Let's just plug these numbers in and let's just take a look and see if it makes sense. Okay, so I basically just copied and pasted from here to a spreadsheet. And I want to see what percentage is in actual stock, right? So now if this is a 3x semiconductor investment, how do they get 3x if their holdings in semiconductors only total about 56%? So instead of the fact sheet, I'm going to go into the daily fund holdings. Now this gives us a holdings percent, but then if I scroll down, I see a lot of index swaps. In fact, this ICE semiconductor index swap makes up 59%, and I start to think, there's way over 100% here. So how are they driving that performance? Now let me see what this index swap even is. I'm going to go to Google. What is ICE semiconductor index swap? And we can see it's not a specific single product, but it's using financial derivatives like swaps or futures tied to the Intercontinental Exchange's semiconductor index. And the first thing that pops into my mind is ICE. I don't know if you viewers remember this, But a few years ago, Jeffrey Sprecher, who was the CEO of the Intercontinental Exchange, he was involved in a lot of shady trading. When I look at leveraged ETFs like this, I just think about 2007 and the financial meltdown. And honestly, I see a bubble forming again. And me personally, I wouldn't put my money there. Let's take a look how much money is in leveraged ETFs. So it looks like there's around $157 billion in leveraged ETFs in the US. Anyway, I hope this information helps. As always, you have to trade your money the way you feel is best. But me, myself, I know I'm not going to be putting $1 of my money in a leveraged ETF. Don't forget to subscribe, like the video, send it to a friend of yours who might be trading leveraged ETFs. It just could save their portfolio.